So indicators gets a bad rap, but there is a use for them, and I use them.
Yeah.
I use them on my daily charts, intraday charts to confirm what my eyes are seeing.
Welcome to Master in 5. Today I have Kunal from Bulls on Wall Street. He's been trading for over 14 years, and so we're going to dive into 5 minutes of one topic. And today, let's make that indicators. So what are your thoughts on those?
The Holy Grail.
Yeah.
So indicators gets a bad rap these days because, there's like a whole bro thing of I don't use indicators, that makes you feel cool.
Right.
But there is a use of them if you're using them in the proper manner. So indicators in general are used for confirmation. That's the sole reason for them. So when you think of like a trade, for example, when you look at a setup in itself, you're like a lawyer. You're building a case. You're looking for pieces of evidence beyond a reasonable doubt why you might want to enter a trade. So every trade is essentially just a coin flip, right? You win, lose, you buy, sell. That's the whole ballgame.
Right.
It's just a coin flip. So as traders, what you're trying to do is figure out how can I take something that's just luck, a coin flip, and turn it into something with reasonable probability. So if you start to overlay different things on it, all of a sudden you can take something that's a 50-50 shot and move it progressively a little bit higher. So, you always start off with price, of course. So like if I'm looking at something, it's like, okay, is this trending or not, right? Is there a price pattern, right? So you have different patterns you might trade. Is there a trend? So you're looking at price in that specific manner. Right. But then now you start to overlay stuff. So like you add volume to your charts, right? So volume is like something everybody likes to talk about, but it's only used for confirmation. When you look at volume, like people will be like, oh, this has got a lot of volume, I want to buy. Well, that's a misnomer, right? If all the volume already flowed in, and then you're like, I should buy it, then you're the last man to the gangbang, right? It's always fun to be first, second, but you don't want to be last, right? And so volume is used for confirmation. See, volume measures the emotional intensity of market participants in a particular name.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show.
It can also assign price validity and confirmation to a price pattern or a price move.
Okay.
But it can't be used to buy. So like say you have a breakout or something along that end, and then the volume is coming in. All that's doing is it's confirming what you see in price. And so all indicators are used to confirm, but never to buy. And the same thing goes with like overbought, oversold signals or moving averages. Whenever you look at any of these things, they're just a small piece of the puzzle to help confirm price action and price patterns.
Okay.
So indicators gets a bad rap, but there is a use for them, and I use them.
Yeah.
I use them on my daily charts, intraday charts to confirm what my eyes are seeing. And oftentimes, especially like when you're new, you might see levels forming or something along that end. But if it's also confirmed with, say, a moving average or a VWAP, right now you have that little bit of that extra confirmation like, hey, this is something that's happening here. I need to look at it a little bit more closely to see if it's worth buying or selling.
Yeah, I love that you said that because that's just so interesting that it's more of, you're just stating the fact that all indicators are just to help you gain more confidence in what you're seeing, right? Especially if you're new. So if you are new, any specific indicators that maybe if someone's curious about which ones should I look at or which ones are easier to understand?
Sure.
Is there a couple?
So the big thing with indicators is like, I like to use the ones that most people are just watching.
Okay.
And for the specific reason that if most people are watching them, there might be actually something brewing at these levels.
Right.
So I use different indicators for my daily charts and my intraday charts. For my intraday charts, I like to keep them clean. So I use a 9 EMA, a 20 EMA, and a VWAP along with volume. And then my daily charts, I'm using totally different stuff. So I use a 9, a 20, a 50, a 200. Then I got volume, and I use stochastics for overbought, oversold.
Okay. Is there one that you feel like as a newbie who's just hearing about these things, they should really focus on? Just
Sure. So
like
look,
at least
when
easy?
you're intraday trading, it's really important to like understand there's 3 phases to the day in the market.
Yes.
So you have your open. I consider that 9:30 to 10:30. Then you have your midday. That's your lull.
Okay.
That's 10:30 to say 1 p.m. And then your close is 1 p.m. to 4. So the patterns you trade and the indicators that you use in conjunction with them change depending on the time of day. So at the open is about price volatility, but also price discovery. Stocks are finding out their ranges, they're absorbing news or macro news. And so what you're using at the open is shorter term indicators. So for example, like I use a 9 EMA for like a first bounce trade at the open specifically. But if you tried to use that setup and use that indicator, like say midday, it never works. Why? Because your 9-day moving average is your short-term trade indicator.
Yep.
So a 9-day moving average, you use it 2 different ways. Number 1, it helps you identify trends on a specific time frame. So that's a very short-term time frame. Beyond that, it can be used as areas of bounce or fade. So if you're looking at your trading day, by the time you get into the midday, you need longer patterns and you need larger moving averages because you're going to have steeper pullbacks. So the open's all about quick hitters, right? So you get a pop and then a pullback to the 9 EMA, you can use that as a potential bounce point. But if you try to do that at lunchtime after a stock has been running 5, 6, 7, 10%, 20%, whatever, it never works. Why? Because you're in the midday. Once you get into the midday, stocks require bigger retracements and bigger pullbacks, so you need something steeper. So that's why if you ever look at like charts from say 11 to 2, VWAP comes into play a lot more. Because once you get into that lunchtime period, those trending names will start to retrace, but they retrace deeper than they would at the open, where there's all these fresh buyers. So you'll get all these big pullbacks into the VWAP or the 20 EMA, and those hold really well. But the 9 EMA is almost like a short signal at that time. So using patterns and indicators is totally dependent on when and where you're trying to do them. If you tried to take the same pattern that you're doing at the open and you do it at the close or midday, most of the time that pattern is going to fail because the open is about price volatility. So you can have really short patterns and then they fire off because you have that volatility at the open.
Right.
The midday is about price retracement and consolidation. So that midday, if you try to use a momentum technique or a volatility technique like you would at the open, but you do it midday when there's a lull, then you're not aligning your 2 goals. And that's why like a lot of times like you'll hear people like, oh, I had this sick pattern and I got knifed on it,
Yeah.
Or the rug got pulled on the like these names, and it always happens midday. Well, yeah, if you're using like a 15-minute pattern, but you're doing it at noon, that's not going to work the same as if you did it at 10 a.m. You know, you need larger term patterns as the day progresses.
Dude, Kunal, this is awesome, man. I appreciate you so much sharing this information. Everyone else, reach out to Kunal if you have any questions. Comment below what you felt like was the most helpful. And then again, have a great day.